Does your family need life insurance? Why stick around? That's what we're talking about today. How's it going, everybody? I'm Joey Giangola with Giangola Insurance. And yeah, it's kind of a trick question. If you didn't figure it out by now, there really is no such thing as a life insurance policy for your family. Your family doesn't need life insurance as much as you need life insurance for your family. Make sense? Life insurance policy is only sold to one person at a time, so just you. That's it. That means you and or your spouse would need to buy individual policies for yourselves if you want a coverage for both of you in case one or the other of you happen to die suddenly, unexpectedly. I know, it's the terrible business of dealing with life insurance. I'm sorry, you don't want to think about it. I don't want you to think about it, but you kind of have to, just a little bit. And here's the $64 million question. What type of life insurance should you buy for your family? So this is a question that could be loaded about 16 different ways, but it really only comes down to one relatively unpleasant result. Your life insurance is meant to keep things as normal as possible if you die before you or your family expects you to. But your goal here, being the person that is worried about protecting the future of your family members, is to have enough life insurance for that to happen. Generally, the most common and likely option for you is a term life insurance policy. You might have heard people also talk about whole life and universal life insurance policies when kind of hinting at this subject around the office. But because we're just getting started on this fantastic journey of talking about you maybe not being here, we're going to stick to term life right now, and maybe we'll come back and see if any one of these two might be a good fit down the road. So we're going to get a little bit real with you. I'm going to give you a very real example, how real my example of the life insurance calculations that obviously me and my family had to go through and what we actually purchase and have in force for our family. So I live in Streetsboro, Ohio. It's a suburb outside of the Cleveland, Akron area, if you will. And I'm 31 years old. And my wife, she's also 31 years old as well. She's actually 2 months older than me. Don't tell her that I told you that. And we have two kids, ages 4 and 2. And we built a house about 3 years ago, a little over 3 years ago, for around $178,000, $179,000. We got around about 15 grand in student loan debt that we need to pay back. So now we need to figure if we wanted to be able to cover that amount of money that is outstanding and provide our surviving spouse, be it me or my wife, enough money to replace our income if we weren't around for, let's just call it 17 years, for the kids to actually grow up and have a shot of getting a job and being, able to support themselves. We would each need about $1 million of life insurance. The reality of the situation is I bought myself a $1 million 20-year term life insurance policy about 4 years ago. Yeah, right around the time my son was born. And my wife, she has a $500,000, $500,000 policy for 30 years that she purchased 2 years ago. And then we also have a couple $100,000 in some universal life insurance, which we briefly talked about, but don't worry about that for the moment. So if you're doing the math and playing along at home, that means my wife is a little itty bitty tiny bit underinsured with her current situation. If she were to be working for that entire time, if she were to have to work for that entire time, her life insurance would actually be a little bit less than what we would actually need to cover that time period. But her rates were a little bit higher than mine, and we ultimately went with what we could afford. You have to be honest with yourself about what you can afford. And for us, we're paying about $100, maybe a little bit less than $100 a month for both of those policies. Again, at the end of the day, if it's more than $50,000 or $100,000 in life insurance, those amounts of money are going to go a long way to making a bad situation better. So next question, how does term life insurance work? Well, it's actually pretty simple. You buy a policy for a specific number of years. I have mine for 20, my wife has hers for 30. If you die during that time span, well, you win, so to speak, and they're going to actually give you that money that you said you want. So for me, $1 million, for my wife, $500,000. Fancy insurance word for this is face amount. If not, well, it's gonna be tough luck. You don't get anything, but it'll actually be good luck because you'll still be alive. So it's probably a lot better, I would think. And again, also, since these expenses that you're trying to protect are not going to last forever, having that much life insurance for that period of time doesn't make much sense. Kids are hopefully gonna grow up, start families of their own that they're ultimately gonna need their own life insurance on. And you're ultimately, hopefully, going to be paying down your debts. Your house will eventually be paid off, and your student loans will be paid off, and most of your big debts will be out of the way. What about savings for college? Well, we're going to go off into left field a little bit here, and I'm going to provide you with a slightly progressive prediction, but I do think you're going to see it play out over the next 15 to 20 years. Now, college savings always used to be an automatic factor in your life insurance plan, but from my experience and the trends that I see happening, big time university and college tuitions are dramatically outpacing their value and overall usefulness. Their costly infrastructure, slow, outdated coursework, and disconnected curriculums are going to have an increasingly harder time competing in the real-time world of online learning. Just think yourselves right now, if you're in your late 20s, early, even mid 30s and 40s, how much specific stuff did you actually have to learn for your job that you didn't even come close to learning in college? I mean, if you think I'm making this up, the social network LinkedIn bought lynda.com, one of the largest, if not the largest, online learning site for $1.5 billion. Sites like these and many others are going to be able to offer highly targeted learning experiences at a fraction of the cost of these big schools. Now, I'm not saying it's not important to have extra money on hand for your child's education. It just might not be as much as what we're accustomed to right now, and it might be more in the form of a literal business investment to your children than this warm and fuzzy figurative investing in them thing. Just like we've watched the slow death of the printed publications, secondary education could be the internet's next victim. Well, what's the bottom line? If you're not sure you need life insurance, you probably do. If someone else is depending upon your financial viability for their continued existence, you need life insurance right now. Not tomorrow, not next week, not down the road, not when you get older, not next year, not when the kids get older, right now. The younger you are with these types of responsibilities, the less time that you've had to actually make money, enough money to protect your family for the long term if you are not around. And again, when all the confusing dust settles, a term life insurance policy is probably going to be standing at the center of any good life insurance plan. So let's go ahead and take it to the next step. What is the next step? Let's learn a little bit more about term life insurance, maybe what it's going to cost for you, and really get a little more specific about it. So go ahead and click on my face to do that. We're going to move on and see exactly what this might look like for you. But of course, as always, I do appreciate you taking the time to watch this video. I greatly appreciate it. And as always, I am Joey Giangola with Giangola Insurance. Take it easy, everybody.